Good morning everybody, welcome back to Cilinix Crypto. Hope you're all doing great and welcome to this new video on Bitcoin. The day after, I think we're all still a little bit hungover from what happened yesterday. If you missed it, which I doubt, but if you missed it yesterday, we had the interest rates coming out for the United States. And just in general, a very important press conference after. So I will give a quick summary on that in this video. But then we'll talk about what's next, right? We've had the interest rate. The next one is in a little bit over a month. So now we're looking into the future and what the future holds for us. So that's mainly what we'll talk about. But to start off with a summary, basically yesterday the interest rate went up from 4.75 to 5%, which in itself was as expected. And then at the press conference after it was quite interesting. There they said that further hikes were not necessarily happening, depending on the economic results. So the economic results in the next month are going to be very important for Bitcoin, and they will make the market move. But until then, I would say that the market right now is just quite neutral. And I think the technicals support that as well. But that's what I wanted to talk about next. And before we do so, if you want to receive daily trading signals, so just send out a buy signal in these dire times, check out the links down in the description. Telegram, Discord, in both there are instructions on how to join. But for now, let's get right into Bitcoin. So as I said, fundamentally, I think right now we're pretty much neutral. I think the outcome of yesterday can be interpreted in a bearish way, that the rates could still be hiked, right? That's just the truth. But it could also be interpreted in a more bullish way, that if the banking crisis actually puts some sort of a stop on spending and on credit approvals and stuff, which is quite likely, then we could also have no more rate hikes. I mean, in the end, it has the same effect. So whether it's really bullish for Bitcoin, we can argue about that, but let's not get into deep economics. So technically, I think that's very well represented as well. Yesterday, after the interest rate, we were quite bearish, to be honest. We had that initial spike, but ever since we've been recovering. We found support at around 27,000, 26,800, which is a strong support level. Also houses the 50 EMA, and from there, what you can see right now, which I think is pretty amazing, is we're trying to break above our main resistance level again, around 27,500. You can see that, and excuse me, I'm analyzing on my laptop now, so everything is a little bit smaller. But you can see that, first of all, we struggled a little bit with that level, but now it looks like we're breaking above that. So to be honest, and this might be a little bit of a risky statement, but I think that if we break above 27,500, then we're in this area again between ultimately then 27,300 and at the very top 28,500. And from this level, I wouldn't see why we could not also break above 28,500 and go up to 30,000, even though 29,500 is first. Because I think it already speaks volumes that we are able to break above 27,500 again. But we haven't done that yet, and we also have to confirm it. So if we break above that, hold it as a support. And that all hasn't been done yet. I mean, for example, if right now we drop down below 27,500 immediately again, it's more likely that we'll continue the bearish momentum down to a level like 26,000. But sometimes it's good to zoom out. I mean, about a week ago, we were still, where were we? At these levels right here, around 25,000. And it would be a dream to be at 27,000, whether we break above it or not. So, but that's my take on Bitcoin for now. I think this is the most likely scenario, but these lines do not really do it justice. I think we will consolidate more than easily break out and rally. But all right. That's my take on Bitcoin. If you do have any questions, let me know. But for now, take care. Have a great day and bye.